YouTube? Welcome to another video of Invest in Myself, and today we're going to get down to basics and we're going to learn what lines of credit are. Now, a line of credit is when the banks loan you out money, a certain amount, and whatever amount that you borrow, you pretty much promise to pay back. The first thing that a line of credit consists of is that it is revolving. That means that you can put your money in and take your money out at any point in time. So for a velocity banking concept here, we are going to treat these like our bank accounts. If you have not seen my previous video, Only Dummies Save Money, please revert back to that video and we can catch you up to speed on what we're talking about. All right, number two, what lines of credit consist of is it's paid off in simple interest. Now y'all see that I have the magnet on here because what this represents is we are going to dive deeper into simple interest in a different video. And once you get the understanding of simple interest and how we are going to apply this, I mean, this is like the ninth wonder of the world, I'm telling you. But back to a general definition of simple interest. So simple interest is your payment applies towards the principal. So all your payments, they apply are toward the principal, and whatever is left you pay interest on. So for example, if I had a credit card balance of $1,000 and I put $500 on there, at the end of that month, the credit card is going to charge me interest only on the $500, not the full $1,000. All right, and last, credit limit increases. I love these. So we'll go over every single benefit that it has here. So benefit A, you can increase the line without a fee or a very minimal fee. So these are when you call up the bank, let's say you have a credit card and you say, hey, I want to increase my line of credit to $2,000 to $4,000. And they say, yeah, that's fine. So most of the line of credit products are going to have no fee. There may be a few that have a very minimal fee that the banks may charge you. All right, so B, gain more capital to compete with inflation. So again, if you have not seen my video, Only Dummies Save Money, please revert back to that and we will catch you up to speed. All right, benefit C, this helps credit utilization. So when you have a line of credit with a very minimal limit, let's say $500 and you use $250, you have used 50% of your credit utilization. This gets reported to the credit bureaus and your credit score is probably going to go down. Now, if you have a credit limit that's very high, let's say $40,000, and you use $250, it's not really going to affect your credit utilization that much and it won't hurt your credit score. All right, benefit D, this helps with emergency funds. So let's say you had an emergency and it costs $7,000 and your line of credit only has $3,000, you're not well equipped. But if you have a line of credit maybe for like $40,000, you will be well equipped for an emergency. And last but not least, my favorite, you can invest into more endeavors. So if you want to get into like real estate or put your money in the stock market here, you have the capital to do so with the line of credit. So now that we have the basic one-on-ones of lines of credit and what they are and how they apply to velocity banking, we are going to take a look at some examples of what different products we have for lines of credit. Woo. Y'all like how I just popped on that other side of the board for the examples? That was dope, huh? So first thing that we have is a Heloc, which is a home equity line of credit. And what a Heloc is the difference between what your house is worth and how much that you own in the house. So for example, my house was worth $500,000 and I owe, let's say, $200,000 on there. I have $300,000 in equity, and the bank will let me pull that out as a line of credit. So the second thing that we have here, and actually it's one of my favorite things, is the credit card. So everybody pretty much knows about the credit card. You can apply online, through the mail, they have them at stores. This is probably the most easiest line of credit that you can get, and yes, you can start your velocity banking with a credit card. Third thing that we have is a Heloc, our personal line of credit. This is where the banks or the credit unions, they give you a lump sum of cash, and once you pull a certain amount of cash out, they start charging you interest, and you can put your money back in to the line of credit once you're done with your investment. Last, we have a Heloc, which is a business line of credit. It's pretty much the same thing as the Heloc, but it's for businesses. So entrepreneurs, you're going to want to definitely have a Heloc because you're going to be pulling money in and out, and you're going to be using this as your business account. All right, now that we learned about lines of credit and we have examples here, we will be moving on. Next video, we'll be talking about loans and what they are and the ins and outs of what a loan consists of. Please like, subscribe, share. Definitely check out the prior videos so you can get caught up on the channel. And I will catch you guys next week. Invest in myself. Peace out.